So let's warm welcome to the stage Mark Bruno, who's going to lead the conversation, Ben Lippman, and Christina Townsend. Give them a warm welcome, please. Thank you.
All right, how's everybody doing? So this is a major milestone for me because I could officially say I'm opening for Blues Traveler. So thank you all for making this happen. This is a very cool day. Been looking forward to this discussion for a really long time. I think the topic is amazing. I think our speakers couldn't be better. As Christina mentioned before we came up, we're really looking at why it's important to structure your business for a sale, even if you're not actually looking to sell your business. We'll get into all the details in just a moment, but before we do, I wanted to take a moment to introduce Ben and Christina, make sure that you had a good sense for the different focuses that they have and also for the different types of firms we have at Pure and BNY Pershing here today. So Ben, just a brief intro and overview of your role at Pure Financial Advisors, please.
Sure, thanks Mark, Christina. Super happy to be here. Ben Lippman, I was on the founding team of Pure Financial 18 years ago. We've grown from a planning first firm all the way to $10 billion, about 6,000 or 7,000 clients. And just wanted to give a brief history to set the stage of some key highlights of how we did that. Go back 20 years. I was in school at San Diego State. My major was actually financial planning. I was obsessed with it and got out into the real world, was able to link up with our founders, and we wanted to start this fiduciary fee-only firm that serves the mass affluent, that gave them real financial planning from a credentialed advisor. Back then, 18, 20 years ago, you didn't really hear those buzzwords, fiduciary fee-only much. Now they're everywhere. But that's what we set out to do. Our current CEO, Joe Anderson, joined us about 4 months in. He's sort of the growth engine, and I was more of like the ops, tech, investment person. Did our first few hundred financial plans, pivoted more into the investment realm, and then supported our growth. And now I'm focused on getting out there and meeting firms, and we're doing a little bit of M&A, not a ton.
Appreciate that, and to give a huge shout out to the Pure Financial team. They just crossed $10 billion in assets 2 weeks ago. Emigrant Partners is a minority investor in Pure, so we're thrilled to obviously see that success. And Pure is one of the most interesting, one of the most innovative, and one of the fastest growing firms in the industry. So Ben didn't sell himself as much as he could have because he's very, very humble. I had to give him props there. Christina, we've known each other for a really long time, never done a panel together. I know you have an incredible perspective on this, but just a little bit of background on your focus and role.
Yeah, sure. So happy to be here. This is my first Future Proof. I'm absolutely coming back. This has been incredible. I'm really excited to be here. So Christina Townsend, I am, when I'm not here and I'm not traveling and spending time with clients, I work at BNY. Just celebrated 25 years. Can you believe it? It's
amazing.
Crazy. Time flies when you're having fun. So I've done a number of different things, but currently I lead our client executive team. So all of the relationship managers that cover our broker-dealers, bank trust companies, and RIAs are on my team. We serve over 600 RIAs with a real focus on the billion-dollar-plus community. But what's really important to us is our optimal client, which is a wealth enterprise that is professionally managed and growth-oriented. So that's really who we look to serve. And I just have the coolest job in the world because I get to spend my days out traveling and spending time with clients and learning and listening. And I'm excited to share some of those things with the audience today.
Amazing. I thought being the head of strategic advisory at Emigrant was the greatest.
Yeah.
But with that, let's just jump right into it because there's a lot of ground to cover. When we mentioned at the outset that this panel is about why it's important to actually be planning for a sale, even if you don't have a sale on the horizon, I think this idea of M&A readiness is something that so many firms are thinking about right now. And when I look at at Emigrant, we're invested in 21 partner firms. We're obviously looking at opportunities all the time. You have to ask the question, like, what does it actually mean, right, to be M&A ready? We will pick that apart throughout the conversation, but just to sort of frame it and plant the seed, sometimes we talk to firms and we say, all right, we're interested in having a conversation. We want to take a closer look at your financials. We need 5 years of financials. What do you get back? You get 3 years of financials. They're in PDFs, right? And the sort of line items on the P&L may be different every year. That firm is not ready for a sale, right? Take it one step further, you could argue that firm is obviously not structured particularly well, right? They don't have great financial management. And that firm, I think about a sale process as essentially being a stress test, right? To determine where there are risks, where there are opportunities in your businesses. And if you are a CEO of a firm and you have ownership over all of those things, whether or not you're looking for a sale, your firm would be considered sale ready. So just as a starting point for this conversation, Ben, I will start with you, right? I just laid out a couple of examples of what M&A readiness means, but why is it important, first and foremost, to be thinking about structuring your firm as if you're going to sell, even if you're not going to?
I mean, I think you're going to sell eventually, whether it's internal or external, but if you're a founder, structuring your firm to scale is going to allow you personally, but also professionally, to spend time doing what you want to do and focus on strategy. So if you can hire people that you trust, build documented systems and processes, you're just going to have a better time and a more valuable business.
Yeah. Oh, absolutely. And Christina, I'd ask you the same question. I think we all know that it's important, but if you wouldn't mind taking a little bit of time to explain why it's important to have that mindset, even if you're not considering a deal.
Yeah, I mean, I think, listen, everyone wants success, right? For themselves, for their clients. That's really what's at the heart of it. Whether you're looking to sell or you're looking to build an enduring firm. And the good news is that the keys to success, I think, are pretty much the same, regardless of what that outcome that you're looking for is. And there's a lot of keys to success, but I would say starting with really focusing on institutionalizing your firm, thinking about people, process, technology, client experience, all of those things. And we're going to cover probably and touch on all of those as the conversation goes on here. But one thing that I would start with is people and the importance of talent. If you are looking to sell, it's going to be super attractive to a buyer if you have really strong talent. And if you're looking to build an enduring firm, you need that really strong bench. So talent and culture is just something that I'm really passionate about. And we see firms having challenges attracting talent these days, but even more so trying to retain the talent. So when they're looking to attract talent, they're sharing their vision, they're sharing their mission, they're sharing all the things that people can contribute if they join their firm. But once they join, retention we see is a challenge. Where people want a career path, right? They want a path to equity in the firm. And sometimes they want to move faster than like you're ready. Maybe the next job isn't available right then. So we encourage firms to really document and think through career pathing, career progression, but to keep people engaged, like even stuff like Future Proof, right? Send some of your colleagues to Future Proof. We offer a next-gen leadership program that brings together next-gen leaders from our RIA firms. We get them together, they have fun, they share, they network. All of those are ways to keep people engaged in the firm as you're building that career path. And I would just say on the path to equity, whether granted or bought, I think it's a really important part of succession planning, to your point. It's a really important part of retaining talent. But it's even more so important from a culture perspective. We just at BNY, we have 50,000 employees, and we just granted everyone stock. And we did it because we wanted to create this culture of ownership, right? That no matter what your job is, we really want you to feel and act like an owner. And talent, I think, is a part of an acquisition strategy. We serve mega RIAs who are acquiring firms all the time, and they're looking to buy talent. They're looking to they have a hard time bringing in talent, and so that's really part of their overall strategy. So institutionalizing with a focus on people.
Yeah, and I think the part about equity distribution is maybe the most important point there, because if we're talking about preparing your business for a sale, even if you're not selling, I think immediately you're starting to think about an external sale, not internal. But if you're the leader of an RIA firm, if you have a growth orientation, right, you are going to, one, want to attract talent to your firm, and two, reward them, right, if they're making direct and significant contributions to your growth and ultimately the value of the business. So if you're not thinking about selling to an external partner, you will have people within your organization who will want to become partners, who will want to become owners, and you should want them to become owners as well. So you need to organize your business as if you're planning for a sale, even if it's not external.
And I can share sort of what we've done over the years. I mean, if we start more recently, when we partnered with Immigrant, I mean, our founder, Mike Fennison, I think he owned 51%. So he started with 90. So do that math, but every year there were different methods to either buy ownership or get granted ownership. I mean, when I joined on the founding team, we were a startup with 0 assets, no clients. There were 4 of us. And he's like, what are your bills? And then that's your salary. And then here's a bunch of ISOs for this worthless company. And then over the years, we did restricted stock, we did non-quals, we did profits interest, kind of run the gamut of how to get employees to participate with real equity. And look at the results where we're super engaged. For a period of about 5 or 6 years before we partnered with Immigrant, we gave away 1% of the company to the employees every single year. And I was always shocked, the people that didn't buy in. But there were a few.
Yeah.
But most did.
And I think you touched on, obviously, the diversification of ownership. And the sort of next set of questions I have is really just kind of breaking apart what some of the characteristics of firms that we would consider to be M&A ready clearly are, right? So I think, obviously, a firm that's thinking about diversified ownership, if not directly acting on it, right, is a must. Christina, maybe I'll just ask you first. If you look at some of the best firms out there, whether or not they've engaged in M&A or plan to, if they're organized, M&A ready, right, have their house in order, let's go with that.
Yeah.
What do they look like and what are they doing properly?
So so I've been asked this question before, and I have to say I don't come up with my own answer, but rather I quote Mark Tibergien, who many of you know, a leader in the RIA space. I had the privilege of working with him for a number of years. And he always would answer this question by saying they have first a really unique value proposition that they can articulate to themselves, to their clients, and that you need to deliver at par on the basics and be noticeably superior where you choose to differentiate. So breaking that down, it's what are the things that an RIA firm needs to offer. You have to deliver those at par or better than your competition, and then choose where you want to be noticeably superior. And increasingly, we see that not in the area of just investment management and asset management and beating returns. It's more about where are you going to differentiate in terms of the solutions you offer, the experiences that you deliver. So I always go back to that because I think it's a great way to look at things. The other thing that successful firms are doing that are M&A ready, they have a really clear optimal client profile. Like they know exactly who they want to serve, and it's not just about this amount of net worth or whatever. It's what are the characteristics of the client that you really, really want to serve and serve best. So that's important. And then I would just say this point about experience, like everyone loves awesome experiences. I mean, look at I don't know if we're ever going to be able to go to an indoor conference ever again after this.
We can't beat this.
I may hang it up after opening for Blues Traveler.
I mean, you went surfing this morning. I may take up surfing after being here. But everyone loves experiences. And so I would say really awesome firms are very, very focused on that experience that they deliver from the time you have a prospective client all the way through the onboarding, and then every micro interaction thereafter, including a cool digital experience. So I would just say the unique value prop, know who your optimal client is, and just be laser focused on delivering cool experiences.
Appreciate that. And there's a lot in there that I want to come back to because I think they're all important points.
Yeah.
But Ben, I know obviously Pure, primarily known for your organic growth, which is some of the most impressive in the industry, but you've been acquisitive. You did 2 deals in the first few months of this year. So I'm curious, when you're looking at any firm, any opportunity that's out there, what are some of your must-haves? What are some of the requirements when you're trying to determine if this is a firm that is acquirable?
Sure, that's a great question, Mark. I think planning first is the most important. All of our advisors are, maybe most all of our advisors are CFPs. Every single client goes through a robust planning process. We don't look at AUM until we complete and deliver a full financial plan. So a love of planning is really important. Maybe they don't do it to the level that we're executing and we can come in and help, and that's an added service. Great second generation advisor talent. That's super important. We grow really strongly organically. Trust me when I say this, it's a weird problem to have, but we have way more leads than we have credentialed advisors to serve them. And as we talked about the talent shortage, the advisor talent shortage is probably the biggest one. And we're looking for great planning-obsessed advisors. So if there's a principal that's looking to exit and they have a couple, 2 or 3 G2 advisors, that's really high on our list. Existing geographies, new population centers. So we're looking at where they are, what they offer, if they align with our planning first values.
Appreciate that. And maybe Christina, we'll come back to you because you were talking about the value prop, and you were talking about things essentially beyond investment management, right? And you mentioned a couple of services and different ways that they think about organic growth. And I have to say, for me, when having any conversation, if it's here or back in the office, which is hard to imagine being back in the office when you're doing a conference on the beach like this, having a conversation with leadership, like some of the Givens was just a high-quality leadership firm, but really, are they growing organically is one of the most important elements of like, is this firm attractive or interesting? And then the other part of it is, how are they growing? Is it something that is scalable and repeatable, and is it random, effectively? So can you offer a little bit more thoughts on just some of the different services that you're seeing that would differentiate a great firm from a good firm? And then on the organic growth side, what are some of the things that you're looking at to determine if this is really good, right, mature institutional quality growth?
Yeah, sure. So from a solution perspective, and back to that point about differentiation and where you want to differentiate, we absolutely see firms expanding the solutions that they're offering. Some are, outsourcing investment management, right? So this is really being driven by client demand. So we see clients, and I'm sure you see this too, they want more from their financial advisor. They want their advisor to be kind of at the center of their financial lives, and they expect more than just managing the assets. So we see this manifesting itself in a few different ways. Family office solutions, so things that traditionally were offered to the high net worth, right, from a family office. Think tax and estate planning, think bill pay. We see some of these things now being offered by RIAs in order to compete. And the clients, they love that. And you have to think about doing it at scale, but definitely see the manifestation of more of the family office solutions. We see advisors increasingly managing the assets and the liability portion of their clients' needs. So what do I mean by that? We have a dedicated group of private bankers that support our RIAs and help their clients with financing needs, investment lines of credit, and we continue to see the growing popularity where the advisor is helping them in those ways. Advisors are increasingly allocating to the private markets. We've seen a 35% increase in alts balances in our RA channel over the last few years. So there's a lot that you could do, and I'll get back to organic growth in a minute, but there's a lot that you can do. I think the most important thing is not trying to be everything to everyone, but go back to who's your optimal client, what do they need from you, and then offer those solutions. And the other thing that you and I talked about yesterday was about what do you insource and what do you outsource, right? So you don't need to offer all these things yourself. You need to leverage partners and figure out, because you want to uniquely differentiate, and you're not going to do that across all of these solutions.
Yeah. And said another way, if your services are differentiated, then that means your clients are probably different, right? That's attractive, especially if you're talking about high net worth, ultra high net worth, and family office type of clients, which I think, Christina, a great point, right? There are very few firms that are doing that really, really well, right, in this space, and it's a huge opportunity. So, Ben, I would love to give you a minute, and we can maybe spend some time just on the organic growth side. When I look at your organic growth rates, like we're talking double-digit net new assets growing in ways that very few firms, if any, in the industry are growing right now. It may be worth just, you touched on your leads earlier, it may be worth just spending a minute talking through what your process and lead generation engine looks like.
Sure.
But also, when you're looking at acquisition targets, how does your model, your approach and strategy factor into the way you're viewing and evaluating opportunities?
Sure, yeah. I mean, I can kind of take that from the back. I mean, if we find a firm that's growing organically in ways that we're not, that's super attractive. Mm-hmm. We do some stuff with COIs, but we don't have a robust process where we're getting referrals from CPAs and attorneys. If we find a firm that we'd be very interested. The data is probably the most important thing. So we have always tracked all of our numbers, all of our leads are different ratios, and there were many years where I was doing it in Excel with 300 pivot tables. Recently, in the past couple of years, we built out a data warehouse where we have professionals, W-2 employees on staff through Microsoft Azure, and it's infinitely scalable, and I can access it on my phone, and I could tell you, I looked this morning, we've generated...
Is that what you showed me yesterday?
Yes.
So cool, yeah.
Pull it up on the screen.
No confidential information.
No, none at all.
No, it's just numbers. It's not any client stuff. But we've generated like 41,000 leads to date, and we've sold X amount of financial plans and whatever. But the way that we do that, we like to think of it as, we call it 3 pillars. We've got media, we have education, and we have what we call digital. The media is we started off with an AM radio show, which now has moved into a podcast, and we have a TV show that we syndicate on local TV, and we get some stuff from that channel, but it's more of just validation or social proof that we exist and we're real. How we really grew from zero to like our first few billion was with adult education. So we would get out and get in the catalogs of the major universities and community colleges, and we would teach financial planning over 6 hours, 2 days, and we wouldn't really talk about Pure until the very end. You know, we want to provide financial education and advice to all those who need it. Then when COVID came around, we couldn't get in the classroom anymore, and we discovered digital. We discovered Smart Asset and their 29 competitors. We will basically buy leads from anyone who will sell them, and we track all of that. We have a 20-person business development team, mostly people that came from the hospitality industry that wanted a 9 to 5 and didn't want to work the night shift, and they're making around 400 touches a day, 200 dials and 200 digital touches, and they're setting appointments on our advisor's calendar. So when we have a new CFP join us, they learn our process, they learn our system, they come into their first day of work, or maybe after they're trained, and they have anywhere from 8 to 20 meetings on their calendar every week until they tell us to turn the dial down. They need to actually service those clients. So those are some of the ways that we've tried to build this repeatable process.
I think repeatable is the one word that I would lean into. So Emigrant invested in Pure before my time. If you see Liz Nesvold somewhere, hi. She can give you a little bit more color, but having a really clear growth engine and a process that is repeatable, right, and scalable too, makes not only Pure an incredibly interesting firm, but you were M&A ready. You just needed a capital partner to help accelerate your growth.
Let me add one thing though. So the advisors, they are spending their time with prospects and clients, and they're not doing anything else. So like some other larger firms, all the trading is centralized. They don't even have access to trade, so it's a team of CFAs doing that. There's a 30-person financial planning team. They're all CFPs, sort of our next advisors in line that are really doing the data entry and the plan recommendations. We have a tax planning team. We have a client service team. So our advisors are in front of those opportunities and doing what they do best 100% of the time. And then it's all facilitated. We've been with Salesforce since 2007, and we have engineers on staff constantly improving our workflows, making it transparent and accountable, and all that good stuff. So that Salesforce is really the connected data tissue that makes it all run.
Yes, so you have the process, but you have the infrastructure, which I think is important, right? Real institutional processes and institutional infrastructure.
And they're documented.
Which
Our
Ben is
chief compliance
very
officer,
proud of.
We have a wiki.
A wiki.
I do want to come back to you, Christina, on the organic growth piece, because I know you work with a lot of larger RIAs, and I know you see a lot of firms, and organic growth is not easy, right? Even the best firms in the industry, right, are really struggling how to crack the code and grow at double-digit rates like Pure. But when you see firms that have institutional approaches, right, and I say institutional because this discussion is about being M&A ready or ready for a sale. We're talking about processes that can be scaled, right? So what does a good institutional quality, scalable organic growth process look like to you based on a lot of the firms that you work with?
Yeah, I mean, I think so much of the conversation is around inorganic growth and M&A, but I would say there isn't a client meeting that I have where we don't come back to organic growth. And it's so important whether you are looking to sell eventually or you're just looking to build that enduring, firm. And we start with saying that growth really needs a strategy. You need to have organic growth by design. It can't be, by chance. And there's a lot of traditional ways. I mean, it was so cool yesterday, you sharing all the ways that you guys are growing. There's traditional ways that folks are growing, right? They have that brand in the market. They're known in their local markets. Referrals still are so a great way of growth, whether that's through a client or a center of influence, right, who's leading you, giving you referrals. But we believe, back to your point, that to drive double-digit sustainable organic growth, it really is going to take investment and reinvestment in the business. And you need to think about these things like an investment, not like an expense. And we think about a few different things. One is it time to have dedicated business development, right, resources? And is it time to not just have the founder or one advisor doing new business development? Is that something that you really, back to the point, need to institutionalize is a big thing. A second piece that is around marketing and having a robust marketing strategy. Some firms aren't ready to invest in talent to bring in-house, but we encourage them to find a partner. Digital marketing these days, I mean, we remember when a website or a LinkedIn profile was cool. We got to go well beyond that, right? Like the website isn't going to cut it. So marketing is a really important piece. And then we were chatting yesterday just about back to the optimal client and not drawing too much of a velvet rope, meaning many of our RAs, when we look at them, and this talks about being M&A ready too, the vast majority of their clients are in the deaccumulation phase. And so when they look at prospective new clients, they're looking at them saying, well, they don't have the assets yet. And I'm not suggesting that you go take every client, but I am suggesting that you go back to that optimal client profile, and if someone meets it, don't shy away from those that are in the accumulation phase as well.
I think that, like, us having no minimums since we started has really helped us. And we thought 20 years ago that we were going to help clients with $200,000 or $300,000, and now, I mean, our average client size is like 1.4. It's just how it ended up working by us opening our arms and accepting everyone.
Yeah, and I think, Christina, the way you just articulated what an institutional sort of growth process looks like, it's really important. And I think if we were coming back to, again, the primary topic of this conversation, like how to prepare your firm for a sale, even if you're not selling, you have to have a handle on all of those aspects of your business, right? You have to understand your growth engines. You have to have a very good handle on your organizational structure, where there's talent that you could elevate throughout the organization, where there might be risks of employees leaving at any given point, right? And ultimately, you need to really, truly understand your client base, whether it's your ideal prospective client or your existing client base. If we were looking at a firm, for example, we're going through a due diligence process and we find out that 75% of your clients are 70 years old or older. Is that a red flag? It's like a yellow or an orange, right? A lot of things are variables, right? If the follow-up question to you is, how many of those clients do you have a relationship with the children, right? And you don't have an answer to that, then it becomes a red flag. And then you're not M&A ready at that point. So I just wanted to call that out as a very specific example of, I think at a high level, you just gave amazing guidance. But as you kind of think about, is your business ready for a sale, regardless of whether or not you're looking to actually sell at some point, take some of those into consideration, go as far into the weeds as possible, give you more visibility to where there's opportunity in your business, but also where there are major challenges. Ben, I want to come back to you. You talked about technology. We touched on scale, but we didn't really get into how important it is to sort of really address scale, have the right processes in place. So whether it's Pure or some firms that you've looked at in terms of acquisition opportunities, maybe you can talk a little bit through what a really prepared M&A ready firm looks like from a technology and a scale perspective.
Yeah, I mean, like I alluded to before, I think documented processes and procedures, especially on the technology side, is important. But what you can do there is, for your employees, you can create guardrails. And we do that all the time in Salesforce, where whether they're putting in a trade request or they're requesting a Roth conversion or a distribution, it guides them through a series of questions and makes sure that it's compliant, it's what the client wanted, and it gets executed. So when we're looking at scaling technology, it's making sure that that internal logic is right and it can handle everything that's going to be thrown at it. And that's what allows us to scale. So if we're looking at different opportunities, it's having, back to your comment, Christina, about talent, it's having that internal talent, whether it's middle management or someone out of college that you trust, that can run all that for you, because that makes the integration so much easier, post-transaction. And I think advisor trust, as I look back on my career, gaining the trust of the advisor group was the most important. Whether it's trusting me to do all the trades, to all the financial plans back in the early days, there was a moment where I was going to be an advisor, and then I chose not to because we were growing so fast and the firm needed a million things. And so I had that CFP background, and we're building the tax overlay, tax loss harvesting, asset location, financial planning, and I needed to execute on all of this and have it be transparent, communicate with the advisors, and as sort of that internal person way back when, there was a distinct point where I gained the trust of all the advisors, and then it it was great from then on. But before that, there was a lot that I had to do that.
No, it's a fair point. It's not just having the technology and the ability to scale. You need that buy-in, right? That's what makes it institutional. And Christina, I know you spent a lot of time in the tech world, and you have a very good handle on some of the best practices, really, of some of the best firms that are in the industry. When you look at scale, right, and when we talk about technology, how important is technology in sort of the context of this conversation we're having around being M&A ready? And what does it actually mean to have sort of scalable processes in place?
Yeah, so scale is another favorite topic of mine. It is, I think, absolutely an industry challenge. Back when I first met you, I was leading our technology consulting group, and that was years ago. And it felt like every day there was a new fintech. I actually just saw Michael Kitces was recording a video, and he has this map of all the fintechs, right?
A couple new AI fintechs here.
There's just a couple. And so, but there was all these new fintechs, and everyone was talking about integration and APIs, and everything was going to be totally integrated, and everyone was going to be super productive. And yet, we haven't really seen that in all cases, and we see firms still needing to hire people as they grow. And it's just amazing to me, given all the tech that's out there. At BNY, we're so passionate about this that our mission statement is to help advisors help more people, which is really based in this concept of we have a productivity challenge. We launched a new advisory platform called Wove, which is everything from planning to trading, rebalancing, reporting, billing, et cetera. But it's whether it's our tech or third party, the whole point is that we want to eliminate the swivel chair, which we still see way too often. Again, look at around us, all this tech, right? And we still have the swivel. Do you have the swivel chair, or have you totally gotten rid of it?
Does anyone remember VEO 1?
Yes.
Wasn't that supposed to do that?
I think so. And here we are. How many years ago was that?
A long time ago.
Long time ago. So anyway, so my point is, I think it's absolutely a challenge in the industry, one that we need to solve for. But when I speak to firms, I start with how do you measure scale? So is it revenue per advisor, or what's your measurement? Because you need to measure, monitor, do things, and then see if they're working. So make sure that you've absolutely come up with a measurement as it relates to scale. And then we've talked a lot about documentation. So this is the other thing. You need to document all of your processes so that you can make sure that you have the right people doing the right things, but more importantly, that you're automating things. And with AI and with workflows, the best firms are going to figure this out. They're going to figure out how to automate everything using tech, using artificial intelligence. So mapping that out is really important. And then I would say the other piece is your tech stack. So I absolutely think that you need to look at technology as an investment, not as an expense. And you have to look at that tech stack. And the biggest mistake that we see people make is the shiny penny, right? Where they come to a conference and yes, there's really cool tech, and they buy different things and it doesn't work together, and then they're stuck. And so how do you resolve that? And by the way, it's not just a drain on productivity. You have a lot of tech that doesn't talk to each other. That's going to impact your client experience, right? You're going to have multiple portals. The data is not going to be consistent. Like, there's so many downstream implications of having a disorganized tech stack. And so what do? Well, you can look at an all-in-one. Someone go to one provider that's going to have all of that tech for you. Or if you're evaluating different tech, really talk and think about integration. And just because someone says something's integrated doesn't necessarily mean that it's integrated. So really study that. And I come across a lot of firms who don't have the resources, so they just don't have in-house the types of people who can look at processes, look at technology. I encourage you to find a partner, right? Custodians have technology consulting teams, partners have, find someone who's going to focus on it, because at the end of the day, scale is going to drive better profit margins, which are important, whether, back to our point, you're looking to sell or not.
Yep.
So
it's really, growth in data at the end of the day that you're trying to manage. It's not just the technology itself, right? But do you have the right tools in place to make sure that, one, you're capable of growing, right, at a consistent, repeatable rate? And then two, Ben, to your point, just around data, if I asked you what your organic growth rate, you'd probably know that off the top of your head. But if I said, how much revenue did you generate last year off of existing clients, right? New revenue did you generate off of existing clients? There are a lot of firms that would have no idea, right? And that's just a basic question. So it really does, the technology, in my view, does come down to how does it influence growth, how does it influence data, and how does it influence your ability as a leader of a firm, right, to make more informed decisions that align with the broader vision and strategy for your firm. We've got a couple minutes left. We got a few questions that did come in, and because you did mention data, Ben, I am going to put you on the spot. Okay. Question that just came in was, what key metrics or KPIs do buyers look for that advisors should be tracking now? So as a buyer, Ben, what are you looking at? What's the magic number?
My answer sounds simple, but you'd be surprised how hard these numbers can be to find. There's a exercise that all firms will go through if they're in this process, and it's called AUM roll forward. And it's basically looking at different quarters and looking at the assets that you start with, new client inflows, existing client inflows, and it's like M&A, existing client outflows, lost clients, those are minuses, and then market movement, which contributes to ending AUM for the period. So it can be tricky to go through your portfolio accounting system and be able to find, and you can define it however you want. We say a new client is someone who's joined us in the past year, but we want to look at their gross inflows. Not a lot of these systems could show you net new AUM. So it's really, maybe working with your provider, diving deep to get those numbers, because those KPIs, are really going to drive valuation.
That's a great point. I'm glad that you brought that up very specifically. It's one of the first things you look at when you go through a process. It's one of the first things that when you start asking questions going back 5 years, well, what happened in 2021? Why did you have $100 million in lost client flows? If there's no answer or not a particularly good answer,
you need to find it.
That's a red flag, right? But that also does give you visibility into where there may be some holes, right, that you need to address, and where there may be opportunities to accelerate growth. I have a great question that just came in, and Christina, I will put you on the spot. It's this last question here. But what is the best question a seller can ask a buyer? And I'll give you both the opportunity to think about this for 1 second and both the opportunity to answer it.
What's the best question a seller can ask?
And if you ask this question, just raise your hand because it's a good one, and thank you for stumping the panel here.
I would go back to, it has to be something about culture. Yeah. So I think culture fit, everything else can be in play, but you need to be able to define your culture, and the one that, the buyer needs to be able to, and the seller needs to align. And I think that's where we see most deals not result in a happy marriage. Yeah.
And Ben, I think that's the winner right there. But Ben, is there anything else that you would add to that?
That's why I went first.
I was just thinking about a question. I would just say, what can I do post-transaction to help grow the combined organization? So it shows that the seller's interested in growth, is bought into our culture, and it's how can we creatively collaborate together to continue to grow this thing?
Yeah. And as we sort of come to the close here, there's a couple of very quick hit questions for both of you that I'd want to just pose. We think about, you mentioned Mark Tibergien before. I can't help but think, 20 years ago, hearing about going from building a practice to a business. And I think within recent years, and that was obviously Mark's written books about that, and we've all learned a tremendous amount. Within the last few years, you've seen more businesses go to enterprise, right? And I think a lot of what we're really talking about here is how do you build an enterprise, regardless of whether or not you want to sell it. So when we look at that, there are so many different things that we've touched on here today. You mentioned marketing before. We haven't really talked about the importance of a brand, right? Do you run a business or do you run a brand? And I don't expect you to give the 10 best practices to building a brand in the 60 seconds that we have left. But because you have visibility into so many firms that have become brands just beyond the individual founder, right, or founders, what's one piece of advice that you'd have the audience here on how they can think about positioning their brand?
Well, I would start with just going back to, I would go back to where I was before, which is, first of all, have a brand, know what it is, but it's not just about the brand, it's about that unique value prop that sits behind the brand, and be able to articulate it clearly. So I think it just goes back to the value and the differentiators for you and your market.
And then if we're talking about marketing and we're ending on brand, I have to give the last word to Pure here. Ben, any thoughts that you would just say as somebody in the audience is thinking about going from a business to a brand, right, where the name of the company precedes any one individual that works there? Any pieces of advice or guidance that you would have?
I mean, I think you nailed it. It's the name. I think coming up with a great name and brand that maybe isn't the founder's last name. At the risk of alienating the title sponsor of this event, who I have a ton of respect for. But it was a conscious decision. You know, our founder, Mike, we didn't call it Fennison Financial. We sat down, I think we hired a marketing firm, and we were like, okay, there's Pure Water, there's Pure Insurance. I think we can get purefinancial.com and nail down that domain, and that was our brand.
Yeah, and I think, just a final note on that, it's not just the name, but when someone hears the name, does it mean something to them, right? When I hear Pure, it means something to me. You're very different from the other 10,000 SEC registered RIAs out there. I instantly know who you are, what you do, and what makes you different. So with that, Ben, thank you for sharing the Pure story here. Christina, thank you for sharing all of your perspective. Thank you for the awesome questions. Really do appreciate it. And if you have any questions for us, we will be around. We'll see you at Blues Travel.
Thank you.
Thank you.
Thanks, guys.